Welcome to today's analysis of Walmart's third quarter fiscal year 2026 results. This is a comprehensive look at one of the world's largest retailers which just reported strong performance across all business segments. In this video, we'll break down revenue growth, e-commerce momentum, international expansion, and what these numbers mean for the company's strategic direction. Let's dive into the data. Walmart delivered impressive top-line growth in Q3. Total revenue reached $179.5 billion, representing 5.8% growth year-over-year, or 6% in constant currency. Net sales specifically came in at $177.8 billion. What's particularly notable is that this growth was broad-based across all three operating segments: Walmart US, Walmart International, and Sam's Club. The company also raised its full-year guidance, now expecting net sales growth of 4.8 to 5.1% in constant currency. E-commerce was a standout performer this quarter. Global e-commerce sales grew 27%, with every business segment posting growth above 20%. This is the seventh consecutive quarter that Walmart US e-commerce has grown more than 20%. In Walmart US specifically, e-commerce jumped 28%. Driven by store-fulfilled pickup and delivery, plus marketplace expansion. Perhaps most impressively, 35% of digital orders in Walmart US were delivered in under 3 hours. This combination of speed and scale is becoming a significant competitive advantage. Let's look closer at Walmart US, which generated $120.7 billion in net sales, up 5.1%. Comparable sales excluding fuel grew 4.5%. Driven by transaction growth of 1.8% and average ticket increase of 2.7%. E-commerce contributed approximately 440 basis points to comp sales. The segment saw market share gains across grocery, health and wellness, and general merchandise categories. Operating income reached $5.8 billion, up 6.3%, demonstrating that the company is growing profits faster than sales as outlined in their strategic framework. Category performance was mixed but generally positive. General merchandise turned positive with fashion, home, and automotive leading the way. Fashion grew over 5% each month of the quarter. Grocery performed well with good unit growth, while health and wellness was up low double digits. Like-for-like inflation in Walmart US was 1.3%, with food and general merchandise both up low single digits. The company maintained approximately 7,400 active rollbacks, with more than half in the grocery category. Since the beginning of the year, more than 2,000 rollbacks have become permanent everyday low prices. An interesting trend emerged in customer demographics. Upper and middle-income households are driving growth, with Walmart continuing to benefit from higher-income families shopping more frequently. Middle-income households have remained steady. However, lower-income families are experiencing additional pressure, though the company is working to help them stretch their dollars further through value offerings. The ability to attract and retain higher-income customers while maintaining the core value proposition shows the strength of Walmart's omni-channel strategy. Walmart International delivered the strongest performance with net sales of $33.5 billion, up 10.8% or 11.4% in constant currency. This segment is increasingly lifting the growth rate for the entire company. Growth was led by Flipkart in India, operations in China, and Walmex in Mexico. E-commerce sales grew 26% with digital mix approaching one-third of total business. In China specifically, e-commerce represents 50% penetration, with nearly 80% of digital orders arriving in under 1 hour. Transaction counts and unit volumes are up across markets, and the company is gaining market share. Flipkart in India had a record-breaking Big Billion Days event, which shifted earlier into Q3 this year. The event saw over $1 billion in sales on the first day, with peak performance reaching 87 orders per second and the fastest delivery in about 3 minutes. Sales growth was led by mobile devices, electronics, and fashion. The event demonstrated lower e-commerce losses compared to prior years, contributing to the 16.9% adjusted operating income growth in constant currency for the international segment. Sam's Club US generated $23.6 billion in net sales, up 3.1% overall. Excluding fuel, net sales grew 4.4%. Comparable sales excluding fuel increased 3.8%, though it's worth noting that prior year comps reflected approximately 120 basis points positive impact from port disruptions. E-commerce sales grew 22% with triple-digit growth in club-fulfilled delivery for the fourth consecutive quarter. Membership income grew 7.1% with steady improvements in member counts, renewal rates, and Plus member penetration. Consolidated gross profit margin was relatively flat year over year at 24.2%. Walmart U.S. gross margin improved 19 basis points due to disciplined inventory management and favorable business mix, though this was offset by pressure in international from channel and format mix related to Flipkart's Big Billion Days event, as well as ongoing price investments in Mexico. Operating income decreased 0.2% as reported, but adjusted operating income grew 8% in constant currency. The business model continues to evolve with higher margin revenue streams playing an increasingly important role. Alternative revenue streams are becoming a significant profit driver. The global advertising business grew 53%, including Vizio, with Walmart Connect in the U.S. growing 33%, excluding Vizio. Internationally, advertising grew 34%, led by Flipkart. Membership income increased 17% across the enterprise. Combined, advertising and membership fee income represented approximately one-third of consolidated adjusted operating income this quarter. This diversification of profit sources is strengthening the overall business model and reducing reliance solely on merchandise margins. Inventory management remains a key strength. Total inventory increased just 3.2%, or $2.1 billion, to $65.4 billion. In Walmart U.S., inventory rose only 2.6%, approximately half the rate of sales growth, while maintaining healthy in-stock levels. This disciplined approach reduces markdown risk and helps fund stronger price gaps. More than 60% of Walmart U.S. stores now receive freight from automated distribution centers, and over 50% of e-commerce fulfillment center volume is automated, driving better unit productivity and lower cost to serve. The business continues generating strong cash flow. Year-to-date operating cash flow reached $27.5 billion, up $4.5 billion versus prior year. This increase was primarily due to timing of certain payments, increased cash from operations, and lower tax payments. Free cash flow was $8.8 billion, up $2.6 billion. Year-to-date, the company returned nearly $13 billion to shareholders through dividends and share repurchases. Specifically, Walmart repurchased 75.3 million shares for $7 billion, with $5.1 billion remaining under the authorization. Walmart is making significant investments in technology and artificial intelligence. More than 40% of new code is now AI-generated or AI-assisted in software development. The company is building toward an e-commerce experience that is more personalized, multimodal with voice, text, image, and video capabilities, and contextual, understanding customer intent. A new partnership with OpenAI allows customers to purchase items from Walmart and Sam's Club directly through ChatGPT. The company is also deploying Sparky, their digital agent, to help customers with reordering and staying in stock at home. These capabilities are becoming key differentiators. An important development announced alongside these results is a leadership transition. Doug-McMillon, who has served as CEO, will be succeeded by John-Furner, currently president and CEO of Walmart U.S., effective February 1, 2026. Furner is a 32-year Walmart veteran who has been in his current role for 7 years. The transition appears well-planned with strong continuity and strategy. Management emphasized alignment on financial metrics and continued focus on growing profits faster than sales while maintaining disciplined capital allocation. Based on strong year-to-date performance, Walmart raised full-year fiscal 2026 guidance. Net sales in constant currency are now expected to grow 4.8 to 5.1%, up from the previous range of 3.75 to 4.75%. Adjusted operating income in constant currency is expected to grow 4.8 to 5.5%. Adjusted earnings per share guidance is now $2.58 to $2.63, including a currency headwind of 1 to 2 cents. Fourth quarter constant currency sales growth is expected at 3.75 to 4.75%. Let me summarize the key takeaways. Walmart delivered strong broad-based growth with revenue up nearly 6% in constant currency. E-commerce momentum continued with 27% global growth and consistent performance across all segments. The company is gaining market share in both grocery and general merchandise while improving delivery speed. Alternative revenue streams like advertising and membership are becoming significant profit contributors. Inventory discipline remains excellent. Cash flow generation is robust, supporting both reinvestment and shareholder returns. The raised guidance reflects management confidence in finishing the year strong. The business model transformation toward omni-channel retail with technology at its core is is progressing well. That concludes our analysis of Walmart's third quarter fiscal 2026 results. The company demonstrated strong execution across multiple dimensions of its business. If you found this analysis helpful, please like and subscribe for more detailed earnings breakdowns. Remember, this material has an exclusively educational character and does not constitute investment advice. Any investment decisions should be made based on your own research and in consultation with qualified financial professionals. Thank you for watching.